Hi, this is Mike Lembeck with Remax Commercial, bringing you today's Let's Talk About It. And today's first article is Borrowers Adjust to Higher Cost of Capital in 2023. Borrowers can breathe a sigh of relief. There is no liquidity crunch coming to 2023. Lenders are actively lending, and there is plenty of capital available to fund deals. That's the good news. The bad news, interest rates have increased at a historically fast pace and are predicted to continue to increase in the first half of 2023. The next Fed meeting is in February, beginning of February of 2023, and they're anticipated to have an increase of 1/4 of a point at the minimum, potentially a half a point increase on the over and above what we currently are at. There isn't a liquidity problem. There is a cost of capital problem. We have to adjust to the fact that it's just more expensive for money to fund deals, and we have to factor that in, of course, from a buyer standpoint on their cost of money and what it's going to do to the potential cash flow on the property. The experts they expect another 2 or 3 25 basis point increases in the first half of the year. So it's just going to be an ongoing increase, but hopefully we won't have any half point increases or like we had last year, the 75% or 75 basis point increases that we experienced. Interest rates are driving a dramatic slowdown in the transaction volume. So yes, we have a lot fewer transactions than we had last year, especially at this time of the year when basically properties were just being sold in a matter of days with multiple offers at over asking price. So because money was so cheap at that time. So the opposite is being in effect right now with the increased interest rates. I think what's going to happen is as we move through the year and buyers get accustomed to the higher interest rates, that we'll start to see more transactions. They're going to find out that that is the new norm, and they're going to have to pay that much to stay in the business and stay in the market. If they're in the market as a investor or as someone who transacts as a real estate investor, 100% of their income is derived from real estate investing. They're going to have to pay whatever the going rate is to be able to stay in business. Will they go and just wait and see if rates come down? I don't think so. I think they're going to be activity from those 100% active buyers or investors. I think that's just going to happen. They're going to have to pay the cost to stay in business. And we may have some buyers who are periodic investors who may buy once a year, once every few years. Those people are going to kind of to stay on the sidelines, see what happens with prices, see what happens with rates, see what happens with rents, if they end up having to be come down, or potentially if they keep increasing at the lower rate than they have been in the past. So a lot of variables that are coming into play. But again, if you're a full-time investor and that's how you derive your monthly and yearly income, then you're going to be in the business. You're just going to have to pay whatever the cost of the capital are. All right, the next article, or the second article, is kind of a follow-up to the first one. This one is Fed policymakers call for further rate hikes to beat inflation. And what it's saying is that on Wednesday, the Fed signaled that they have the top policy, there's support for the top policy rate of 5% on the interest rate that they're going to be charging. And inflation shows signs of having peaked and the economy is slowing. And even though that's happening, they're still planning on doing the increases. And they've penciled in a 5% to 5.25% policy rate in the coming months. So it looks like it's going to be coming up going up no matter what, based on, it doesn't really matter what's happening with the inflation and the economy. That's their projected rate that they're going to be at. The Fed's benchmark overnight lending rate currently sits at in the target range of 4.25% to 4.5%, and investors expect the Fed to lift that rate by a quarter of a percentage point at the end of its January 31 through February 1st meeting. So again, there's more information on projected increase of 0.25%. Some of the Fed policymakers are saying that they should just, go right to 5.25 to 5.5% range. Why wait? Why do anything different? I don't know. I think you got to kind of wait and see what's happening with the economy. We've seen a pullback already in real estate and transactions, and I think you got to take it slow rather than just dramatically raising those rates and then potentially have to cut them later on to re-stimulate that economy. Let's see. The reason why they're having these interest rate increases, or what people are saying that they should raise them dramatically right away, is that the answer may be part and be found in the latest Beige Book report published by the Fed on Wednesday. The compilation of survey data from the central bank's districts around the country showed that while prices continue to increase, the pace in most districts was reported to have slowed. And again, the transactions have slowed dramatically in real estate. That's my business. I know what's happening in that market. I can't say anything for anywhere else, but I do know the stock market has been down the last couple of days considerably from earnings reports and that type of thing that are influencing the stock market. So in the immediate right now with our real estate market, yeah, we've had a dramatic decrease, at least 50% off on transactions. If you have any questions on any of the information, I'd love to talk to you about it. If you have any questions on any of the products that we have as far as the programs with the deferred sales trust, the Delaware statutory trust, and some of the other programs that we have as far as the shared equity program and the property reposition program, I can go over those with you and show you how we can work with you on those. Again, the people that are involved in that are very experienced and have a long track record of helping others, and testimonials if you need those or need to speak directly to the parties involved with all those programs. I'd be happy to put you in touch with them so you get a better comfort level on what those programs feature. Anyways, reach out to me at any time for any reason. Need a market analysis on your property, need a referral for a lender or a contractor, be happy to offer those also. Looking forward to hearing from you, and I'll see you on the next one. Have a great day.